As decisions unfold or not in Washington, our next guest says fiscal spending could provide ballast heading into 2023, specifically with EVs and infrastructure. That's the stuff that's already decided upon. We don't have to worry about the arguments in D.C. now. Jay Jacobs, BlackRock U.S. head of Thematic and active equity ETFs, joins us now. I guess it's more helpful right now to look at what's done rather than what's going to get done, Jay, given what we're seeing unfold in Congress right now. But given what has been done, given that the so-called Inflation Reduction Act is still, a lot of that is yet to be sort of put into actual effect. What should investors be watching for this year?
Well, I think we're at a really exciting stage for infrastructure because if you think about this process, everything from making new legislation to award, the $1.2 trillion in the Infrastructure Investments and Jobs Act, or the $370 billion in the Inflation Reduction Act, that all was completed in 2021, 2022. The next stage is the government bureaucracy. Various agencies like the Department of Transportation or the FCC have to determine how to allocate those dollars. The dollars get allocated. You see massive projects like rebuilding a bridge that can take years. Finally, the fourth stage, we get to enjoy a fancy new bridge or we get to enjoy faster internet access. We are in stage 2 right now. It has passed the major legislation. Now you're seeing those allocations. Just yesterday, about $2 billion was announced for various bridges across the country, from the Golden Gate Bridge to the Brent Spence Bridge in Ohio and Kentucky, to various bridges in Connecticut and Chicago. So this is an exciting inflection point. Dollars have been earmarked. Now they're being allocated, which is great for construction engineering companies.
Jay, kind of in the spirit of what we saw with GE Healthcare finally having its spinoff and going public and listing yesterday, wanted to get your sense on healthcare as a theme this year. It seems like consolidation is going to be part of the industry, heavy R&D, post-COVID vaccine pushes, candidates that we had seen of the past 2 years, and then the rollouts of those vaccines, and then additionally some of the spinoffs that we know are finally starting to activate.
Yeah, there's really two compelling reasons to own healthcare right now. One is that it tends to be more stable during a recessionary environment. This is not something that people decide to spend money on. They have to spend money on it. And a lot of that money is also funded by government spending. So that gives it some really defensive properties. But maybe on the more growthy side of the spectrum, there's been a lot of advancements in healthcare just over the last 3 years because of the COVID-19 pandemic that we could finally start to see monetized. As you were mentioning, COVID-19 vaccines can leverage some of that technology from mRNA to potentially create vaccines for HIV or for the common flu. We're seeing incredible mRNA potential advancements in areas like cancer treatments. So you start to see this technology being repurposed and put into various trials. We think 2023 could be a huge year for medical breakthroughs, providing a nice growth opportunity within the healthcare space.
Jade, are there themes you think that just won't work this year?
I would really be skeptical of kind of long duration, non-profitable tech themes this year. Think about this as a pendulum. There are times when people want to make big bets, that they have a long time horizon, that they have very cheap access to capital. That's great. That means you can invest for major transformational technologies. But right now, we don't have that. We have companies cutting back, layoffs across the tech space. We have more expensive capital right now. So companies don't want to bet on moonshot technologies. So I would avoid those non-profitable tech companies and focus more on what is really recession-proof, like infrastructure, like medical breakthroughs, or even areas like cybersecurity, which is technology, but it's become a staple for many companies.
All right, let's leave it there for now. Jay Jacobs, BlackRock U.S. head of Thematic and active equity ETFs. Always good to see you. We'll talk to you soon.